Good afternoon, everybody. Good afternoon. My name is Peter Bautista. I am your host for today's episode of The Trading Room. Thank you again to everybody for spending your afternoon with us as we have a chat with our very, very special guest. Before anything else, just a few reminders. One, we will be entertaining questions from our audience, so please feel free to use the chat box. That said, suggestions for future guests or future topics you want us to feature or for succeeding episodes are welcome, so just chat away. And finally, a little bit of plugging. Please don't forget to join our Viber community, One First Metro, your source of market news and updates. With that, let's get this show on the road. Our guest received his Bachelor of Science degree in Business Management from the Ateneo de Manila University. He is an alumnus of the Philippine Trust Institute, and he earned his Master's in Business Management from the AIM. Our guest is so special. He is a recipient of the very prestigious ING Phoenix CFO of the Year Award in 2019. After leaving the banking industry in 2004, he has since found his home, or a home, in Ayala land, no pun intended. Our guest holds key positions across the ALI organization. To name a few institutions that benefit from his experience and expertise are AREIT Incorporated, Cebu Holdings, Ayala Land Logistics, Ali Eaton Property Developments, Amaya Land, Avida Land, Ayala Property Management, Ceredra Incorporated, Ayala Greenfield, Alveo Land, Ayala Land Premier, Makati Development, Portico Land, and Alabang Commercial Corporation. Ladies and gentlemen, we are privileged to have this afternoon as our guest, Senior Vice President, Chief Finance Officer, Chief Compliance Officer, and Treasurer of Ayala Land, Mr. Augusto Toti Bengzon. Sir Toti?
Good afternoon, Peter.
Hi, sir. Magandang hapon. How are you? How are you, sir?
Very good, thank you.
Great to see you again, sir. Thank you for accepting our invitation to have a conversation with us this afternoon.
I'm glad to be here.
Thank you. First off, so how have you been, sir, over the past year and a half?
Actually, quite good. I think the only thing that I experienced at the start of the pandemic, and this was, I recall very clearly, we locked down on March 17 in 2020. And in 2 weeks, I lost 8 pounds, primarily because of the stress, because I didn't know what was hitting our company. And in a way, that was a good thing, right? I needed to lose weight. But since then, I've regained 4 pounds. So I guess things must be better nowadays, given that I've regained the weight that I lost on account of stress. Hopefully, with the lockdown tomorrow, I hope I don't lose more weight. But I think the company is in a much better position to weather the next couple of weeks, given what we had gone through last year.
That's great. Yeah, I think everybody's in this habit actually of losing weight. I'm sad to hear that it was stress that drove you to losing that 8 pounds. But 4 pounds is still 4 pounds is still a good thing, sir. Sir, let me just go to the meat of the discussion. Ali reported an amazing first half performance of 34% increase in net income, if I'm not mistaken. Can you please share with us how, while still under the shadow of Corona, the company this level of performance?
Oh, well, it's really a credit to the team across the entire Ayala Land Group. You have to remember that Ali, as we know it, is actually like a conglomerate. We have close to over 100 operating subsidiaries under the Ali brand. And we've got close to 6,000 employees deployed across the group, and probably another close to 10,000 project employees who work on our various projects. Plus, on the construction side, we've got right now over 40,000 construction workers deployed across our sites. So everybody has pulled together during this pandemic, and we've been working hard on what we said we were striving to do this year. Our battle cry for this year is Rally 21, and we are aspiring for a V-shaped recovery. And truth be told, it was looking quite good during the past, I'd say, 5 months. There was a bit of a blip that we experienced at the end of March when we went back to ECQ. And that sort of slowed the momentum. And we did slow down in the second quarter of this year. And then tomorrow, we're going back to ECQ. And we do expect that, again, the business will have to take a breather. So the results that we showed that we disclosed recently is really the work over the past year and a half of the team, the collective Ali team, and they all put together to achieve our targets. So far, it's I would say reasonably good. If the environment had been more conducive, I think we would have posted much better results. But all things being equal, I think the first half has been okay. Could have been better, but I'm not complaining because the challenges really that we had to surmount were quite significant.
Well, after a 6 billion number, that's pretty okay. Yeah, I agree with you. Well, 6 billion's okay. Thank you, sir. You mentioned your employees. You mentioned the 6,000, 10,000, 40,000 employees. How has the company looked after our precious resource over the past year?
I think I should step back probably and talk a little bit briefly about the 5-point action plan that we incepted right after the lockdown. 2 weeks after the lockdown, the management team of Ayala Land, the Mancom, got together, and under the leadership of our CEO, we crafted a 5-point action plan. And the first part of that plan, or number one on that plan, was to protect the workforce. And clearly that was our priority, to protect our employees. And we did it in through multiple ways. The first, of course, was our digital initiatives, which we had been working on in earnest over the past 5 years, had actually prepared us for such a scenario wherein we actually had to work from home. So I remember the day we locked down, the next day, everybody was online. We were collaborating on Microsoft Teams. That's our platform, our collaboration platform. Everybody was on these video calls. And we've continued to do that up to this day. So in many ways, working from home, we were able to switch to that mode relatively quickly, actually instantly. Aside from enabling our people to work from home, during the pandemic, we've provided insurance cover for COVID. This was something extra that we gave to our employees, essentially for any amount that, say, field health and our regular insurance cannot cover. We provided an extra layer just to give our employees an additional layer of comfort. We also provided shuttle services. As you know, it was a little difficult to commute and a little risky. So we made sure that we could shuttle our people to work. And we did convert quite a number of our facilities to serve as quarantine areas for our employees. In the event that they needed to quarantine, and in the event that the health facilities in, say, in the respective LGUs would not be able to accommodate them, we were ready to accommodate them in our own quarantine facilities. That was close to 80 beds deployed here in Makati and in New Valley. That's still available to our employees, and we will continue to monitor their respective health situations. The big thing we've been pushing over the past couple of months, Peter, is vaccination. We've encouraged, and we have actually started on a vaccination program. And I'm pleased to note that as of the beginning of this week, I got a report that for our employee base, are close to 6,000 employees, 70% have been vaccinated, either the first or second shot.
Great,
So
great,
7% have been vaccinated. And when we expand that employee base to include those who are working on our projects, it's for our project employees, about 60% have been vaccinated. So we're moving as fast as we can to provide vaccination to our employees as well as our project team members.
That's amazing, sir. I guess it's really true that if you take care of the employees, the employees will do their best also to deliver on what's expected of them. So that's basically digital. You went digital ahead of everybody else, or just in time. You were ready to go digital, and right now the vaccine is a priority for the company. Kudos, sir. Kudos. Amazing, sir. Sir, on a personal note, what's a regular day like for a Mr. Toti Bengzon?
Oh, it's actually quite boring, Peter. Monday to Friday, I'm in the office between 8 to 8:30, and then I have lunch in my desk, care of Food Panda. Given that we no longer have business lunches. And I'm home by about 6 in the evening. I like to take an hour walk, at least 5 kilometers every day. That's my exercise. And after dinner, we just hang with the family. We try to attend on a daily basis, which I found quite refreshing. We attend a daily mass on video. We have our favorite masses, care of Tito Kaluwag, or there are a couple of U.S. churches that broadcast the mass, which we also like to attend. And that pretty much sums up a regular working day. The weekend, on a Saturday, I try to get in a round of golf with my friends. And on Sunday, it's family time again.
Now I get why you lost 8 pounds. Every day walking, that's a lot. That's really a lot, sir.
Peter, one thing I always said at the start of the pandemic, don't waste the crisis. So from my personal standpoint, the crisis got me so stressed that I started working out, at least walking, and I've continued that. The video mass is also something we've continued. And for the company, there's a lot of initiatives which I can talk about that came about as a result of this pandemic that we're continuing to this day and that will serve the company in good stead.
That's great. Thank you. It's really nice to hear that people have actually turned to religion more over the pandemic. This is the best time to actually talk about. The pandemic has given us the opportunity to spend a little of our day with him. So nice to hear. So nice to hear, sir. I'm a people manager just like yourself. How have you been motivating your employees over the past year, sir? If you can share.
Well, the great thing about Ayala Land is that we all have shared values that we that we espouse and that I believe we all believe in. The shared values of Ali are live-in: leadership, integrity, vision, excellence, and malasakit. I think over time, these values have been imbibed by our people, and they live it, and that gives us a shared purpose. And because of that, motivating the employees is a lot easier, I would say. What what I probably pay more attention to on account of this pandemic is that we need to try to communicate as frequently as possible. And it's not easy. I've found that living on Zoom or Teams is actually more tiring. And I've actually had to make sure that I am very cognizant that the working hours of Ayala Land are from 7:30 to 4:30. And I don't like to call my people or meet with them after that period. And as much as possible, definitely not on the weekends. And so we try to organize as many meetings as we can throughout the day, and across the group. Just the other day, we had a town hall. We regularly have a town hall at least twice a year. And for the finance group, and the finance group in Ayala Land is relatively large. About 20% of the 5,800 employees are in finance. So I actually have a big group in finance, and we also have our own town halls where we're able to share experiences and talk about the priorities of the company. So motivation, I think today in this environment is primarily by communicating what's going on and engaging in a dialogue. So at the town hall, there's always got to be a Q&A, and that's where you get to hear what's on the minds of most of our people. I'm pretty pleased that we just got the results of our engagement survey. We have this survey every 2 years, and I was quite pleased to note that the finance group actually scored higher in terms of engagement than the Ali group, 2%. And the Ali group, as expected, scored significantly higher than the Philippine norm. So in a sense, I guess in finance, we're able to do something right in getting our people engaged. And I think it's all about communication, frequent communication. You can't communicate enough with your people.
That's nice. So, just for the benefit of everybody else, that was communication that breeds engagement, that breeds a shared value system that leads to respect, and eventually, the respect for work-life balance. Great job, sir. Great job. Just to remind everybody, the audience can actually type in their questions if you have any questions. Sir, so far, just for you and FYI, we have so far 212 attendees right now that managed to get inside the trading room. Although we hope we have rather around 400 registrants. So our biggest numbers so far for our fourth episode, the very popular, si Mr. Bengzon. So we have a lot of registrants.
I think Peter Anthony Bautista has developed a following.
He said, dumami sa'yo. Sir, as I shared with everybody earlier, you were a former banker. In your opinion, how have the markets changed since the last time you were actually in the trading desk?
Oh, it's been amazing, the change that has come to our capital markets, our domestic capital markets. I remember the first instruments I traded were actually 1-year treasury bills, which we would sell down in 30 or 91-day chunks. We used to call them splits. Can you imagine? That was the appetite of the market. Everything was short term, both from the issuer side as well as from the investor side. That was I guess that was what was available, or maybe that was the preference. But since then, I would say the market, the domestic capital markets have grown tremendously. And if I may cite what I would call in terms of breadth and depth, the market has grown. So breadth in terms of the number of issuers out there and the number of investors, and in terms of depth, in terms of the how much volumes are being traded. So in the past, what would you trade? T-bills, 364, 182, 91-day T-bills, and a smattering of commercial papers, short-term commercial papers from, I guess, some names, the primest or the bluest names then. Fast forward to today, let's just look at the fixed income market.
Yeah.
Of course, you've got the T-bills, and it's now you've got T-bills, T-notes, and bonds. So you've got instruments from 91 days all the way up to 20, 25-year bonds issued by the sovereign. Similarly, on the issuer side, and I'm glad that Ayala Land was part of this, we did list the first corporate bond way back in 2008. And that was if I recall correctly, the issue size, that was a 5-year bond, and the issue size was, I think it was less than 5 billion.
Yes, sir. Yeah.
And today the fixed income, the corporate bond market is now over 1 trillion pesos.
Yes.
Got many issuers, and I'm glad that one of the focus areas of First Metro is to develop the capital markets and bring in new names. You were part of that journey. First Metro was part of that journey. We did bring in a new name, CHI, Cebu Holdings.
Yes, yes.
Maybe you were a joint lead underwriter for that issue. We brought that bond to the market. That was a new name. And overall, the fixed income market has actually helped I guess, both the issuers and the investors. On the issuer side, because that's where I was able to participate directly in developing the domestic fixed income market. I always believed that it would be good for a company like Ayala Land to have two wheels to support its growth. Two wheels, when I say two wheels, it's we had access to bank financing and access to the capital markets at any point in time. And if you can imagine, when I started here in 2004, funding was primarily through the banks. Today, we've got a debt load of about 217 billion pesos. I would say 80% of that is financed through the debt capital markets. So it's been very, I would say, a very productive exercise for the company to have been participant in the development of the domestic capital markets, as it allowed the company to diversify its funding sources. And, we haven't really seen a financial crisis in the Philippines in a while, but we know what happens. Any one of those two funding sources can seize up at any point in time.
Yeah.
And so we just wanted to make sure that we had access to both. And in the process, I think, and I speak particularly on the debt capital market side, the fixed income side, it also allowed us to reach out directly to retail investors. We're quite pleased that most of our bonds go out to the retail side rather than just to the institutions. And in that way, retail investors now have a choice on where they can put their investments or their cash. They can put it in the bank, or they may opt to also invest in Ayala Land and other corporate issuers. So it's really been a mutually beneficial relationship, I think, between the issuers and the investors, and it all comes together in our debt capital markets.
Great. Well, I would like to thank you for having us on some of your journeys. Thank you. I think at first deal we were there. That was before my
Yes,
time in First Metro, but I think we were there. We were there in your first transaction. Thank you very much, sir.
in the past 10 years alone, First Metro has been in 16 of our 20 debt capital markets issuances, either as a joint lead underwriter or as a co-lead or a co-manager. So thank you very much for being part of this journey, FMIC. And
Thank
we
you.
do hope to see you in more of our upcoming transactions. This year alone, if I may just give you some sense of what's coming around the bend, we are actually embarking on the largest refinancing program ever. This year, we've slated close to 50 billion pesos worth of refinancing. That's almost a quarter of our total debt portfolio. And the reason we're doing this is because we see that there's a lot of opportunities to both bring down our cost of debt as well as lengthen our maturities. And that's being made possible by both the banks as well as the debt capital markets. We've, you know, let's go back to 2020 last year at the height of the pandemic. I was really pleased that Ayala Land was able to issue a bond in June. It was a 2-year bond, which we were the first out the gate. And I think it was just very important for us to demonstrate that there was some sense of normalcy returning to the markets and that our investors as well as the underwriters would be supportive of a name like Ayala Land. And we did a 10 billion issuance in June. And who would have thought that in the midst of a pandemic, we could get it done. Then in September, we issued a 5-year bond. So gradually, we started to lengthen the tenors of our issuances. Just this last month, we started with our bank refinancing, and now we're getting 10-year debt. And I understand that maybe in 2 months, will be issued to issue a 10-year bond. So, it's again, very heartwarming to see the support coming from both the underwriters as well as our investors in financing our requirements. And for Ayala Land, the longer the tenor, the better, because our projects are also long gestation projects.
Yeah.
10 years is par for the course for our projects. As you know, we develop large-scale mixed-use estates, not just individual condominiums or office buildings or malls. We develop estates, and those are long-playing projects. Therefore, from a capital structure standpoint, we need the
Long-term.
longer tenors from our debt.
Understood, sir. Well, I guess you had 2 issuances or 3 issuances over the course of the Corona year. I guess faith and trust and good performance really trumps the virus. Well, it really trumps the virus. Congratulations, sir. Good job. Good on you. Good on you. So I have a question from the audience. Being a very busy and senior executive, are you able to find time to read? If so, what books or magazines or periodicals are you reading now or are on your list?
Well, I think it's not a question of finding time. I guess it's been part of my routine. Maybe I failed to mention how does a regular day go. For me, it's really when I wake up at about 6 in the morning, grab my coffee, and I read the Philippine Star, the Daily Inquirer, as well as Business World, and USA Today. And then at night, it's before I go to bed, it's the Wall Street Journal, because that comes in late afternoon. And throughout the week, mainly during the weekends, it's normally the Economist, as well as Fortune or Newsweek. I think that's become routinary for me. It's part of my habit. I don't feel secure leaving my house without having read the papers. And of course, throughout the day, we're glued to Bloomberg. And my in my office, I got cable TV. So that's either on ANC, CNN, BBC, or Bloomberg.
You,
Now, in terms of, I enjoy reading. So I've got a couple of books at any point in time by my bedside. And I normally catch up during the weekends. So I just finished a week or two ago. It's Farid Zakaria's 10 Lessons for a Post-Pandemic World. And I did distribute to my FG Finance Group Mancom and my CFOs. I believe it was chapter 6. Anyway, it's lesson 6, which I thought was most appropriate for Ayala Land. That chapter is entitled Aristotle Was Right. We are all social beings. And it's not so much about us being social beings as it is about cities, urban areas continuing to thrive. I think there's been a lot of discussion about the future of cities, given what we've experienced during the pandemic, where most of, the most dense urbanized areas is where you have a risk of high infection. But, even a year back, we were having these discussions at the senior level. And we look back to the Spanish flu, for example. And after these pandemics, cities come back to life. And they even become more pronounced. Urbanization, we think, will continue. And the reason really is, as far as we were concerned then, is that efficiency. There's efficiencies to be had in cities. Farid Zakaria is saying that you need cities because people are social beings. They need to interact. I didn't see that. But then, yes, we need to interact. We need to meet. We need to dine together. We need to, go to leisure facilities together. So that chapter just made it more concrete to me that cities, urbanization will continue. And the other thing he talked about was work from home. He said, yeah, people will work from home. We believe that, there will be more work from home opportunities, but offices are not going to be extinct. People will continue to go to office. And in his book, he talks about people wanting to congregate and have those informal water cooler discussions. Meeting in the office continues to be a source of learning for employees. So work from home, there will be some of that, but offices are not going to go away. And city definitely will continue to thrive. The other book, I guess the more for fun reading, I'm now reading How to Think Clearly, The Art of Thinking Clearly by Rolf Dubel. And it has very short chapters on all these cognitive biases that we face. And, recognizing these biases allow us to avoid it and think more rationally. So I like these books that help me understand the way I think and hopefully make me think better. And the last book that I've picked up, it was in my library here behind me. I had read it a long time ago, but I thought I had sort of forgotten what was in it. It's The Mystery of Capital by Hernando de Soto. And I think it's quite appropriate, now that capitalism is under siege. It talks about and gives us a background on why capitalism can be flawed. But it also talks about what we can do to unlock capital and in the process uplift the lives of most people who currently are in poverty. And it has to do with making these basically giving title, putting a legal framework around property. Could be intellectual property, but more often than not, it's physical property, land. If you can have a good legal system to protect the holders or those who occupy property, then they're able to unlock the capital and plow that back into the economy, and in the process contribute to the economy and uplift their lives. So it's quite an interesting proposition from this individual.
That's
And
mystery
I
of
think
capital, right? Mystery of capital, sir.
the
That's
mystery
mystery of capital. Yeah.
Fernando De Soto.
Yeah. Copy, sir. By the way, I checked the book ni Zacharia. It's out of stock, so fully booked, guys. So you gotta wait for the next order. Okay. Sir, I have a question here from the audience again. 1.5 years into the pandemic and with new mutations looming, what do you think would take companies to survive another year of lockdowns and quarantines?
I'll tell you what, and this is what we worked on last year. And I guess to a certain extent, this is one of the underlying principles that we espouse in the company, and finance has a lot to do with it. It's to ensure we have a strong balance sheet. We want to have a fortress balance sheet because that is what ensures that you can ride out any crisis. And last year, we had a lot of initiatives precisely to strengthen our balance sheet. I talked about our five-point action plan. We had 4. I talked about protecting the workforce. We had the second one was serving our customers. The third one was helping the community, and the fourth was thinking ahead towards recovery. But underpinning these 4 action plans was the 5th, and maybe it could be the first, but I like to look at it as the foundation for those 4 pillars. And that action plan was around financial sustainability. Okay. And we had to make sure that the company could ride out the storm. So aside from generating liquidity, which we did, as I mentioned, we were able to issue a bond even in June. We had credit lines in excess of 70 billion, which we really didn't have to draw on. We were able to, we continue to sell, and we were able to sell our accounts receivable, which I mentioned, I think, to you some time ago. It's like a securitization.
Yes.
We're just waiting for you guys to be able to start a securitization program in the Philippines. Anytime we have something that approximates it, that achieves the same effect for the company. So we had all these initiatives to make sure we had the liquidity, and we strengthened our balance sheet by reducing our gearing. Our gearing has always been well within norms. But I guess we took the extra step to make it stronger. And I can talk to you about what are these metrics that we use to ensure that our gearing is with where we want it to be. But essentially, the banks, they prescribe a debt equity ratio for ALI of 3:1. Right now, our net gearing is at 0.74. So we're never going to get to the 3:1 that allowing to go to. But we are also looking at S&P 500, S&P Standard & Poor's metrics. What kind of metrics should we maintain to ensure that we have an investment grade rating? So we're cognizant of what the banks prescribe. We look at S&P 500's investment grade credit metrics. And we look at our cash flows to see what we can comfortably service. We have prescribed internally what we call our debt ceiling. We have a debt ceiling that we don't want to breach. That's internal to us. So when you put all those factors together, then we know exactly where we want to be. And what we did last year was I think people will say, the market says that Ayala Land is quite conservative when it comes to its financing. Last year, we probably were even more conservative, and we continue to stay conservative because you never know what will happen. Yeah. So a strong balance sheet is what will ensure that we can ride out this storm. Last year, I told my team, this pandemic is like a war, and wars will take longer than what everybody expects, and that's exactly how it's playing out. So we were prepared last year, and so this year things aren't turning out as what most people had anticipated, we're still ready. And we're ready to ride out the storm for as long as it takes. And in the process, we preserve the value of the company. We haven't had to do silly things. We haven't had to sell assets like it was
This is on crisis. Yeah.
No need. No need. If you look at how analysts value the company, it's primarily on a net asset value method. And when I look at their valuations today, their updated valuations, our net asset value has been preserved. So even the third parties, the analysts, agree that we've the values inherent in a property company remain as such. So we're quite pleased that this strong balance sheet has allowed us to preserve value and ride out the storm. So we're confident if this lasts longer, then so be it. But we won't have to do anything rash, and we'll be able to, most importantly, protect our people.
Yeah, conservatism and prudence, those are the weapons of war, it seems. Those are the weapons that you would need for a long drawn out battle. Sir, I have a question here. If you can share your personal investment philosophy, please.
Well, I guess I've learned this from my banking days, and it's been honed in my stint as the treasurer, now as the CFO of Ayala Land. I think first and foremost is you've got to have a balanced portfolio. Okay, so related to that, what I continue to hone would be asset allocation.
Okay.
90% of the return of your portfolio is from asset allocation. So first, you gotta have a diversified portfolio because you don't know what's gonna happen tomorrow. And secondly, you got to allocate appropriately to the asset classes that will give you your desired risk return, or that will achieve your desired risk return targets. So it's not about trying to achieve the highest return, because that will mean you'll take exceptionally high risk.
Yeah.
And I like to sleep well at night. Both, as far as my personal portfolio is concerned, and as far as the finances of the company are concerned. So we pay special attention to capital allocation. If you're talking about my personal portfolio, it's making sure it's diversified and well within the asset allocation guidelines that I set for myself.
That's nice. The discipline of asset allocation is something that really should be shared with the rest of the investing public. Sir, there's a question here on REITs. What's your view on REITs given the next lockdown will probably force more companies to shorten the leases, and the impact of the lockdowns on the POGOs? Your thoughts, please.
Okay, let's talk about the office industry, office leasing industry, and the REITs that have come to the market are office REITs. We believe that BPOs are not going to go away, and therefore offices will continue to be tenanted. I don't think we've seen that shift for BPOs to a work from home environment.
Okay.
I saw that early on last year, because there was an article I remember in the Wall Street Journal where they interviewed a Filipina who was working from home, and she was complaining because while she's working from home and talking to somebody, say in the United States, the chickens would be crowing or the dogs would be barking in the background, and she'd have a difficult time explaining to her counterparty what was going on. But more than that, it's security. I don't think you can have the same type of security in a home network than what they would have in the office. And I'm talking about tech, the security of your the infrastructure that BPO workers are so reliant on. So the REITs will continue to prosper because the underlying tenants will remain. Most of these REITs, at least in the case of Ayala Lands REIT, we listed the first REIT last year, August 13. So we're coming up to our first year anniversary by next week. And we didn't have any POGOs in our portfolio. I just disclosed to the market at our mid-year briefing that for Ali's office portfolio, and we are the largest office landlord in the country with 1.3 million square meters of gross leasable space. The percentage left with POGO is about 2%. They've left at the peak. We were at 9% POGO, and we made a determination early on not to be overly exposed to POGO. The early days of POGO, we already said no more than 10% of our office portfolio will be leased to POGO because we didn't know how it would play out in the long haul. And again, that's proven to be quite prescient because POGOs have started to leave. But in our case, the impact has been very manageable because we had set a sub-limit and we were not reliant on these POGO tenants. So when you look at the upcoming REITs, again, I'm reviewing the prospectuses, and by and large, the tenants of these office REITs are BPOs.
Yes.
Some headquarter and minimal POGO. So the prospects for REITs, office REITs in particular, I'm quite optimistic. I'm glad that Ali was part of that journey to bring the REITs finally to the Philippines.
Congratulations, sir. Congratulations. Thank you. Thank you. Thank you for finally bringing it to the market.
And
so
if I can say, Peter,
yes,
because REITs now are an important component of my personal portfolio because I think REITs, it's a hybrid. It's somewhere in between fixed income and equity. So even from a risk return standpoint, it's somewhere in between. So fixed income bonds are relatively low risk, but your returns on an after-tax basis are also, say, a 10-year bond, you probably yield net 4%. And then you've got the REITs in between, which give you a regular cash flow by way of the dividends. In our case, we declare dividends every quarter. And in addition to the regular dividends, which will yield, in our case, our target was to give dividends, a dividend yield of about 5% to our investors, which we've been able to do and exceed actually. You get, the investor gets that dividend. And in addition to that, there's a potential for capital appreciation. A REIT has appreciated over a year by at least 30%. 30%. And then throw in the dividend yield of about 5.5%. So your total return over a 1-year period is about 35%. Yeah. So it's been quite good. And then of course you have the equities, which are higher risk, higher return. And what you've seen in this market is it's actually the REITs that have outperformed. And that's why I guess you're seeing more issuers listing REITs. It's good for the issuer because then he has an opportunity to recycle capital. It's great for the investors because they have another investment outlet that they can put in their portfolio.
Thank you, sir. Thank you for championing REITs. You're right. It works best for everybody. Issuer in terms of issuers, in terms of investors. So I know you're kind of pressed for time right now. Last few questions. What do you think is the biggest challenge or the biggest headwind right now for the company? And how do you think we're going to navigate through that, sir?
It's easy to answer. It's the pandemic. We got to resolve this. And the only way to resolve it is to get as many people vaccinated as possible. I'm glad that there's a bigger supply coming in the next couple of months. The government has been able to negotiate those, and they're starting to arrive. And if I'm not mistaken, the daily vaccination rate has also increased. Yes. At one point, I think we were able to hit 700,000 in. And so, it's a question of getting everybody vaccinated, and then we'll be able to resolve this. For the time being, it's stay home and observe the quarantine restrictions. And then hopefully in a couple of months, we'll have more people vaccinated. Hopefully that the vaccines will also be able to combat the Delta variant. And if there are other variants that come out, I think the medical solution is a little bit more advanced, or much more advanced. I think they would know how to sequence a vaccine that would be able to combat any new variants. So from here on in, I think it's a question of getting people vaccinated. And I'd like to think we've seen the worst, and things can only get better from here on in.
That's nice to hear, sir. Sir, as our afternoon draws to a close, can I ask you for some parting words for our viewers, especially those that have decided to pursue a career in finance, sir?
Well, first, I want to thank First Metro and Metro Bank. You've been partners of the company for all these years. As I mentioned, First Metro has been with us on 16 of our 20 debt capital market issues in the past 10 years. Metro Bank is always there to provide us with our needed bank financing, as well as they also provide mortgages together with PS Bank to our residential buyers. So, thank you to the Metro Bank Group. You've been instrumental in the growth of Ayala Land. We did celebrate our 30th anniversary, and when we look back, it's been an amazing journey, and the growth of the company has been quite tremendous. So to anyone who wants to get into a career in finance, join First Metro or Metro Bank and learn as much as you can from them, because the Metro Bank Group is a leader in the financial markets in the Philippines. On the personal side, I think you got to be passionate about finance. And what I can say is, and probably what this pandemic has shown, finance practitioners will always be in demand. As a matter of fact, today, it's a little difficult to find finance personnel to fill up roles because they're in high demand. So finance is always going to be an integral part of the capitalist system. I joined banking many years ago because I didn't know what to do after college. So my dad just told me, why don't you go into banking? Because it's the lifeblood of the economy. And true, all companies need access to financing. Banking is at the center of commerce. Now, once you get into banking, it's a necessity. I mean, banking is finance is required, so you got to get passionate about it. Otherwise, and you find passion by finding meaning in what you're doing, and that's what I've seen these past years. My career in finance has been amazing. I learned so much from when I was in the banking industry, and now I'm able to apply what I've learned in Ayala Land. And I see the power of finance, not just in uplifting yourself. Finance people know how to invest, but it's also in how you contribute. In my case, how we've contributed to make Ayala Land a financially sustainable company, and also the contribution to the economy. Finance ensures that things are working well and that the economy can continue to grow. So you're always going to be at the center of the development of not just the company you're working for, but also for this country.
You heard it, guys. Guys, find your passion, find your meaning, read your news, and read your books. Okay, friends, that's all the time we have today. Sir Toti, on behalf of First Metro and Metro Bank, we'd like to thank you for having this informative and very interesting chat with us. I'm sure I speak on behalf of our viewers in saying that we look forward eagerly to the future projects and endeavors of Ayala Land, which we can support. A special thank you to our friends and partners for again joining us this afternoon. Our guest has generously left us with so many takeaways and so many insights for our professional and personal lives. On that note, stay safe, everyone, sir. Stay safe. Thank you very much. See you guys next time in the trading room. Thank you. Thanks, sir.
Thank you. Take care, everyone.
Thank you, sir. Thank you. Sir, if you can still entertain a call, I'll give you a call. Can I call you?
Well, we can stay on this line. Are we live?
I think there are people pa.
Yeah, you weren't able to ask me what asset allocation we could prescribe to our viewers.
Oh, sir. No, I wanted to give you your 5-quarter. I'm sorry. We extended a
It's
bit.
all right.
Yeah.
No, but thank you, Peter.
Thank you,
for
sir.
having
Thank
me.
you.
And
Thank you.
yeah, you want to call me on my Viber line?
Sure. I'll add Sir Pat also.
Okay.
If it's okay with you. I'll give you a copy. Thank you. Thank you, sir.
Okay.
Thank you, Mr. Bengzon.